Everybody, this is going to be the management, I guess, lesson one. I'm going to decide whether or not we need to build out from here based off of the feedback that we get. I'm going to preface this entire, I guess, lesson with management is the single most personalized component of trading that one can really encounter. And I'll give you some examples of that in just a few minutes. But the idea is that people often think that there's a one-size-fits-all for management. And couldn't be further from the truth, at least in my opinion. My management plan is something that I feel out based off of what's happening in the market. And I'll give you some examples of that in just a second. But ultimately, you got to kind of ask yourself: are you trader A, you trader B, trader C, whatever it is? But we'll break these down into two different people. Trader A is somebody who is funded, okay, and then there's somebody who might be have like a decent sized personal. Whether they've already used funding to acquire that capital, or if they've just already had a decent amount of personal capital that they've traded. And again, no need to get into the actual numeric value of what a personal should look like or a funded should look like. It's all relative to your life and your circumstances. So when we're trading with a personal account, it's a lot easier to keep the higher time frame in mind because it's a lot easier to hold trades longer term, take adequate partials along the way. And all these things sort of just depend on, your management style, which is essentially what we're trying to determine which trader you sort of are. And I think, for the most part, I would say that most people are looking to do this, right? Trader A, get funded, get in and out, be able to bank some R every single day, which is a really, really great strategy. So this often gets really, really tied into intraday trading styles, which is obviously we have an intraday entry model, but the way that we trade is alongside higher time frame narrative, right? So there's all these different components to essentially getting involved with very high probability, really, really accurate levels to be able to get into where liquidity is stacked in the market, et cetera, et cetera. So here's what I'll say, and I'll give some examples, of course, but here's what I'll say. The bottom line is if we are looking to use our entry model system from a sweep of liquidity, okay, such as something like maybe like this, we sweep these relatively equal highs, we come into here, we don't have any liquidity to sort of target. We don't have a multitude of orders that are sitting here. As this builds like this, right, as we create more and more and more mitigations, when we've already had an order flow shift, now you can start to target levels beyond the liquid region that we're going to target, right? So all this to say, targeting intraday liquidity and targeting the next demand or supply beyond those regions, for example, like liquidity, like, again, easy to see in hindsight. That's the whole purpose of this this entire thing, right? Is to be able to show you these things in hindsight so that you can develop some sort of a strategic plan in how you're going to get out. For me, it's a little bit more personalized. It's I'll look for a hedge against my position if I see a really strong reaction to a level, whatever it might be. But anyways, just to not get too off track, looking at this, it's very, very simple. I mean, ultimately, this high right here fails to get breached. We have an order flow shift. It respects supply. We break down, order flow shift, respects supply again. The lows are weak, right? Like it's inevitable that the lows are weak, at least the way that I view it. And again, it doesn't mean that you're taking full volume into the weak lows. where's the next place that you're going to see a reaction, right? And these are things that you have to ask yourself. And it doesn't matter what time frame you're on. The time frames are irrelevant. The bigger the time frame, the more profit, but the more drawdown you're going to have to hold through on these deeper pullbacks. You know, on a 1 minute chart, this might be on a 100K account, that might be a $2,000 drawdown. On a 4 hour chart, this might be a $20,000 drawdown, right? If you're trading a funded account and there's a drawdown rule that's based off of equity as opposed to balance, you're going to get dinged here, right? You're going to lose your account on that drawdown. So you can see how all of these things factor into how you make decisions on how and when to take profits. I know a lot of people that have funded accounts that take profits right after spread hours. Why do they do that? Well, because this allows the buffer that they need to be able to hold this into drawdown to the next scalable position, right? So, you know, all this to say, like, I'm not going to be able to nail down exactly how to manage a position because a lot of people are super interested in this, okay? They come into this unmitigated demand level. It's not even technically a demand because it doesn't break anything relevant to the left, but there's going to be a reaction here. Why is there a reaction here? Well, because quite frankly, every single person that is trading smart money for their first 3 months sees imbalance, they see demand, they see equal highs, and they automatically think that this is going to the fucking moon. Doesn't mean it won't, but the thing is that when you start to think about where your past self would take positions, you ever hear the concept you want to target liquidity, and if you don't know where liquidity is, you become the liquidity? It's the same thing, right? Management is all about targeting where other people would want to take the opposite side of your trade. Doesn't mean you need to take it doesn't mean that you need to take your full volume off, but it means that you need to be really, really considering where these areas are going to be. We're not going to get reactions in here. We're not going to get those. Why? Because, one, we're too high up in price, and two, this doesn't break anything. There's nothing here. There's nothing going on, right? And again, this is just one example, but I do want to talk about this broadly because I think that, you know, every single person in this community, and I think we're coming up on 200 people, no two people are going to manage the same position the same way. Remember that management is an input, right? And it's something that you can control, and it's one of the very few things that you can. Entries, simple. Why are they simple? Because quite frankly, if you're doing this properly and you're doing the things that we're teaching here, every entry looks the fucking same. There's nothing unique about the entries. They're boring. It's the most boring part of trading is the entries, because quite frankly, you just wait, and then you wait some more until the actual entry model shows itself, and then you go, okay, well, this is it. I mean, like, there's not much more to it, right? So when it comes into, okay, now my perfect example, my 200K account, let's say I get in here, which is where our entry model triggers us in. I get involved in the trade. I'm 60K in profit, let's say. 20K, 10K, 1,000, 400, doesn't matter what it is. Doesn't matter what the number is. But the bottom line is you gotta know when to take money off the table. If you look at this, what do we got? We got liquidity, right? All sorts of it. When you target this level right here, okay, you know that the next reaction can only pull from a demand level, right? So to a certain degree, there's probably demand in here, right? So guess what? Target the top of the range, right? Take 80% of it off there. Because you know what happens with this? If we move up into here and we get our entry model again, 80% of your profit can now fund this move. You can take 2 or 3 losses in here and still be ahead of the game to be able to get the scale in to target these equal lows now. And then you're targeting here, right? So it's a sequence of events. You have to understand that in order for price to move in a direction, it needs to build orders underneath, in this case, those levels. How do we build orders under these levels? Well, we need people to go long, right? When people go long, stop losses sit here. So targeting here, stop losses are here, right? They're sitting underneath these lows. So when you know that and you're able to target these liquid regions with the intention of scaling into your next position and being able to fund these positions with the profits from this impulse, to me, there's no better way to manage. And furthermore, if you're worried that we're into like a weekly demand, maybe there's going to be a deeper pullback coming up in this general direction, look for a fucking hedge, right? Look for a hedge. The modeling system works the exact same way. There's nothing different about looking for the hedge. That's the beauty of the 15-minute order flow, 4-hour POY, working your way down from that SOP-based approach, checklist, If all of your entry criteria builds this way right here, but it's against the higher time frame leg, take the fucking position, right? And why do you do that? Because now, if you've taken 80% of your position off here, and now you're banking on the fact that we are going to get held up here, you take 80% off at this level, right? And then all of a sudden we break through here. Well, what's the next move? Well, now we're coming back down into here to make demand, so now we're going to scale our position again, right? And now we can keep going this general direction. Have a narrative for both sides. And like, that's what trading is, right? You don't have to be right every single time, but you have to understand where money is flowing and when things change. So for me, guess what? This high breaks, I know that we have a strong low, or that we're going to get a really, really good reaction to this low. Doesn't mean that I'm not going to take into consideration this bigger time or higher time frame lag, that I can take sells, but you just need to be careful about where you're partialing, right? As things change, nobody knows what's going to happen, okay? Anybody who tells you these predictions, in my opinion, they're fucking full of shit. Nobody knows. Trading, when you are not a part of a hedge fund or an institution that moves the market, man, we're sitting here reacting. That's our job. Our job is to react to conditions in the market. Where is the next reaction going to come from? You have a really good idea of where it's going to come from. Do we know what it's going to take out? Not necessarily. But you can play into the narrative and get yourself over to a really, really strong break-even position with a very heavy partialing in place. So getting back to funded A, or trader A, which is a funded trader, target liquid regions. Okay, if your entire narrative comes from a 15-minute week low, which is right here, okay, target the fucking week low. Take 80% of it off. If it goes down another 100 pips, oh fucking well, you got paid, right? There's no perfect management system. Management is one of the things, at least in my opinion, that is ever changing. It is constantly being toyed with. As you get better at managing your emotions, management becomes this thing where you can actually play a lot more with to be able to squeeze more profits out, to be able to hedge positions. There's all these different things that are involved, but like, that's not what we're offering yet. And the reason why is because we need a foundation of traders to be able to understand the entry model system first, and really the top-down perspective that we offer within this community to be able to get you to that golden goose, right? And be able to show you the different methods in how we can potentially look at managing positions. But the bottom line, if there's one sentence that you need to take away from this entire thing, is that nobody goes broke taking profits, okay? And I want you to remember that. It's not about hitting the 100R. It's not about hitting the 500R. It's not about hitting 50, 20, 10, 5. It's about getting paid. Your decision is to get paid, okay? And if you want to watch this move all the way down here, and you say that this low is weak, and then all of a sudden we sweep all of this, and you take this out at break even on a 400K account, funded account, and you lose 40 racks, what do you think you're going to do? What do you think the next move's going to be? You're going to short this the whole fucking way up, because you will not be able to manage your emotions properly because you didn't get paid. The name of the game in trading is get paid. Stay the fuck off Instagram. Stay the fuck off of any social platform where people are boasting about profits. I am fucking relentless for doing it, because I want people to see that it is possible. But the bottom line is I know how to pay myself. I can let trades run 400R. I don't do it anymore. Why? I've already done it. I'm fucking losing sleep at night. I'm losing sleep. I'm staring at a screen. My eyes are bleeding out of my head. It's not a sustainable model. Scale your income. You're not going to hit one trade that's going to change your life forever. You are going to hit a strategy and a management system that will forever change your life over time. It's the most important thing in trading, and it's the hardest thing to talk about because there are no two traders that will manage positions alike. Getting into personal accounts, I'm just going to touch very briefly because I think 98% of the people that are involved in our community are people that are trying to acquire funding or are already funded. Personal, very simple. When you play into higher time frame narrative, if you can, again, I'm not using this specific chart as it's just, this is what's up right now. Let's say we had this sweep, we took liquidity, you were able to get involved somewhere up here on a lower time frame entry model. Where's the weak low? The weak low is here. Why is it weak? Didn't take this out, right? Very simple. So you can hold this into the weak low. You can take your first partial at the weak low. So all you're doing with a personal account is bumping up your time frames, right? I think the easiest way to put this, and again, just like hearing myself talk, target 15-minute liquidity for funded, target 4-hour liquidity for or daily liquidity for personal, provided that you can hold trades overnight and that you're okay with doing that. With the size of the stop losses that we use, anywhere from what, sometimes you can get even like a 1.5 pip stop, depending on how aggressive you are. We'll call it 2.5 to about a 5 pip stop loss, I think is about an average with like a 1 minute or a 5 second entry, depending on how aggressive you're getting. With that tight of a stop loss and that high of an RR ratio, risk reward ratio, RR ratio, target the next liquid region. Man, I take trades now, and we're kind of getting sidetracked, but I just want like this to be so ingrained in your memory. I take trades now, when I take them, that would pay doctors' salaries in different countries in the world, and I do it in a matter of hours. So put that in perspective, because it's not about holding a $180,000 trade or a $400,000 trade. It's about how you get paid every time you execute your top-down analysis. I'm going to leave it at that. Bombard us with questions about it. Let us know how you like this. There is no proper way to manage. There are so many fucking different ways that you can do it. The easiest way to do it is target where you think the next trade would come from. And when you start to think about the market in that context, not only are you priming yourself to be able to take an absurd amount of money out of the market, but you're also priming yourself for the next move that could potentially happen.